Hi, everyone. Thanks so much for joining. And what a week for markets. There's a huge amount of event risk. There's corporate earnings. There's tons of economic data. But actually, the big story on Tuesday is the oil price. So the oil price is absolutely tanking. Brent crude is down more than 4%. It's actually fallen below $74 a barrel at the time of writing, as you can see in the chart here. It's been on a really sharp decline, and I've circled that there on the right-hand side. So now that we've talked about oil, I will talk about some earnings releases. So we've seen the banks in the US report earnings, very strong so far, particularly from JP Morgan and Goldman Sachs. Revenues up 45% year on year for last quarter. Bank of America, they met expectations, but we've had some really strong earnings data. Now we've got Netflix coming up on Thursday. So that's typically considered the start of tech earnings season. Netflix also expected to deliver some really strong results with revenues up year on year and also profit levels as well. They could also drop in a few surprises, such as potentially a price hike for their subscriptions from 2025. So they may not announce that, but they may tout something like that. Now, will that mean, is demand for Netflix, is that quite elastic for prices? We think that it is, and that consumers will see Netflix really more as a necessity and will suck up any price increase they have. So that could actually boost the stock price because that could boost revenues down the line. Now, elsewhere, we've seen US stock markets make more record highs at the start of this week. Nvidia made another record high. That was on the back of the executive board in Nvidia saying that they've sorted out some of the glitches and production problems in their key Blackwell chip. However, export restrictions on the chip makers. However, does it really matter? There is a US election coming up, so we'll have to see if that really impacts Nvidia today. But stock market's really going great guns. So you've got a strong economic outlook in the US. Economic data in the US surprising to the upside, and then you also have, so far anyway, strong corporate results, particularly in the financial sector. So those three things are a really good outcome for stocks right now. So we could see that momentum continue, although US stocks are looking incredibly rich and some may argue slightly overvalued. Now, lastly, I want to talk about UK CPI. So this chart shows UK CPI. As you can see, it's really fallen back from those highs reached in the first quarter of 2023. It has dropped dramatically and is expected to fall further for September, actually below the Bank of England's target rate of 2%. So we're expecting a 1.8% rate of core inflation. But we don't think that the Bank of England will all of a sudden cut rates really, really rapidly. Not yet, anyway. And the reason why is because service price inflation is expected to remain relatively high. However, we have seen better economic news start to boost the pound. So the pound has been rising today, particularly against the US dollar. That's after the better labour market report. So all in all, a good day for the pound, a bad day for oil, and we'll be looking at what stocks do later as well. Thanks so much for joining, and speak to you soon.